Hello. Welcome to Pro Trader Strategies Market Commentary for Thursday, April the 16th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I've talked about everything from economic to geopolitical and market analysis. And in these daily market commentaries, I do about the same thing, but I layer on top of it option strategies I find by going through that economic and geopolitical and market analysis. Please keep in mind, past performance of any trading system or methodology is not necessarily indicative of future results, but what we're trying to do here is find option strategies that we can implement under those assumptions that we come up with from digging through all of this different types of data. So let's get on with it. Across the pond, not really a whole lot to see there, but here in the United States, we got some pretty ugly economic data, to be quite honest. We've got unemployment claims coming in at 5.2 million claims. That is for the week. We are looking at just over 20 million jobless claims since this coronavirus started happening. That's basically putting us at around 17% unemployment. Building permits did go up, but one thing we've talked about so many times is that you can pull as many permits as you want. That's not a great economic data point, because I can pull a building permit and I just don't build on those permits, all right? We need to look at the permits in relation to how the starts start happening. One thing we started seeing is in housing starts that came in at 1.22 million starts. One thing to note with that, they break ground, they lay foundation, and then they stop. Well, that's considered a housing start, to be quite honest. And it doesn't mean that they are going to continue that going forward. It could just be a foundation sitting there. They haven't put the sticks up, as we used to say. Also, then moving on to Philly Fed manufacturing, that came in at a negative 56.6, one of the largest numbers we've seen drop in quite some time. Natural gas storages goes up by 73 billion cubic feet. Something to talk about here with crude oil. This is getting kind of ugly. This is the first settlement yesterday when we settled below 19. If I pull up the marker here, you can see settlement below the close. I thought it was a close below $19 yesterday. Anyway, a close below $19 will be the first time we've seen since 2002. So that is starting to look like it is a pretty for sure thing. That being said, also up in the Dakotas, Canada, we're seeing those prices per barrel be at around $6, you guys. It's cheaper than going out and buying a pint of beer. The other thing we're seeing is in those far-reaching areas with the supply coming in and the demand waning, we're just not using up all that we're producing. The inventory, there's no places to store this stuff, so the storage is at capacity, basically. They're going to be looking at paying people to store that. So negative crude oil in some areas we might start seeing. So that is kind of crazy. That is putting prices really under pressure. So that's something we're going to really have to keep an eye on. So Philly Fed, though, manufacturing would be that is a record drop in the Philly Fed, just so we are clear on that. All right, let's move on to the markets. Crude oil making a little bit of a move despite what we're seeing there. And the beige book yesterday, which I didn't get to talk about, that's one of those things that the Fed really looks at. Philly Fed is a Federal Reserve release of the manufacturing sector, right? That was that biggest drop ever there. But the beige book economic released yesterday showed that job cuts were expected to increase even more and is set to worsen. That was one of the big highlights coming out of that Philly Fed that I want to make sure you guys are aware of. So that is some pretty disparaging news there. We're seeing the equities kind of slough it off. Maybe not so much over there in the S&Ps, but when we get onto the equities, we're going to see that the markets are really starting to retrace, despite the fact that we had those candles yesterday that when we were doing the daily market commentary looked like they were engulfing patterns. Got a bit of a push at the end of the day to make that not look quite as bad, but it still didn't look too great. But crude oil making a move higher here. Gold trying as much as it can to hold on to some gains here, up just $2 on the day. Another thing to note is we did see a lot more Fed buying in the treasuries coming into today. They are expected to continue with those Fed operations supporting these levels, continuing to suppress interest rates. All right. So we've got bonds moving higher back into that 180 handle yesterday and are holding on to that. I think we're going to hold on to that 180. We might see some pushes below that, but that's where the Fed is really going to come in and start to support it. All right, the VIX just slightly off. As I've talked about, we are seeing the equities, beside the fact that now Dow Jones in negative territory by about 22. That can easily be made up. We've got the NASDAQ, really the leader of today, as you can see, just continuing to rip the faces off of the shorts, up 181 points on the day there. And we've got the E-mini S&Ps in positive territory, up about 20 after yesterday's big sell-off. That was the engulfing pattern we were looking at on that. Not confirmed today, but I've talked about this. I think we're going to see a lot of this gyration back and forth. NASDAQ, really being led by things like Netflix making all-time historical highs. Facebook, a bit of a lagger. I thought that Facebook would be one of those that really starts driving, but Netflix, I'm sure, we just signed up for Netflix as a family. I'm not a big Netflix watcher, but through all of this, we have re-signed up, and I think a lot of Americans are doing similar to that. So not only do we have Hulu, we have Netflix now too, and I think a lot of people are doing that, which is helping drive that to all-time highs there. Probably that Lion thing, whatever that Lion show is. I'm one of those guys that haven't watched it, so but I don't watch a whole lot of TV anyway. All right, so E-mini S&P is up on the day. You can see on that economic data, we really got slammed, but it's shrugging it off right now as we go along. I think some people are like, hey, I kind of expected that. It may have been a little bit worse than what we were expecting, but I was expecting that nonetheless. I wanted to pull up a Netflix chart here. Netflix. As you can see, just ripping the cover off of the ball with this up almost up trading around 450, up $20 on the day. So people are doing Netflix and chilling throughout this coronavirus, so that's really starting to spike. I haven't done anything over in my portfolio as of right now, you guys. I'm kind of holding off on that because I'm kind of pretty comfortable with my position there. I do have Delta, I do have Disney at levels that were a little bit higher there, but holding on to things like my EA Sports, which I'm still believing in. I think Facebook should start to make a turnaround. The Coca-Cola, I looked to do some covered calls in Coca-Cola, but I didn't want to lock in a loss on that. I'm at $53. So selling those 52.5 calls, I wasn't getting enough credit to really make it worth my while. And selling anything above that, really, I was looking at collecting maybe 10 cents or something like that, which isn't really going to lower my overall cost basis. I don't want to, do it for those pennies when I would be risking the upside on dollars, where I am actually bullish in this particular underlying there. We are seeing some weakness going on in MasterCard. It's starting to fall over a little bit. Had a couple opportunities to sell some calls against that and lower the basis, but again, I was expecting this to make another bigger move higher there. So another thing is Microsoft, I did have some of those called away from me at a quote unquote break even. So with this move higher, yesterday I talked about looking at selling some calls in there and sold those 60 calls a couple of days ago, the 160 calls, but actually those 160 calls were the ones that got called away from me. I'm long Microsoft at 300, and that was based on selling some puts during that downslide. Then I started lowering my overall cost basis, sold the 160 calls. Well, those, a third of my position got called away yesterday. Somebody jumped the gun on it, and then I remember I sold the 195 calls, so those are still in play. That's about it. That's about all I've done so far, but everything else is just kind of sitting there and working itself through all of this, as you guys are too as well, I'm sure. All right, that's about it. That's all I've got for you guys. If you can't take that, take it easy.